a question I get a lot from people is, I understand why they do that, but they don't understand that that doesn't make your money safe. It actually doesn't help at all. But I think what's behind that is people are seeing what's going on with inflation. How can people protect their savings right now from inflation? What are some simple ways people can do that? We'll start with you, Anne-Marie.
Yeah, I mean, we always go with the rule of thumb of trying to understand what someone's 3 to 6 months worth of expenses are. And that just needs to be in a very safe place, maybe not as safe, but in the bank. And then above and beyond that, there's ways that you can work with the market and, be in simple investments that can keep pace with inflation. They're usually things that people have to have. They're in the budget no matter what. They're your needs versus your wants. And when inflation goes up, you don't like that if you're a consumer of those products, but you like it very much if you're an investor in those products. So those are the tried and true, just kind of dividend paying companies. And then the higher interest rates have given more opportunity for people to earn more on their cash, so to speak. CDs are paying more, money market rates are paying more, they're more competitive. So leaving it in the safe, there is some missed opportunity there.
Lots of missed opportunity. Yeah, I think that when it comes to cash management, even whether it's a business or a family, I think people sometimes aren't prioritizing liquidity.
Yeah.
And so that's where the cash management comes in. Mm-hmm. There's CD laddering right now. And that's also how you would get away and mitigate the risk of rates falling, is lock it in for a good year, right? And then you can pick it back up with that portion of your money that's supposed to be not really growing much, but you're getting some income on it. Laddering CDs, I mean, 2-year bonds are paying nicely right now.
And these are investments that have a little bit of upside, enough to keep up with inflation, but very little downside, right?
It's really for income. Right. They're not even really keeping up with inflation. It's just, that's not true. It's better than putting the money in the safe. So if you're comparing those two things.
Or even just a regular bank account.
That's right.
Right. But if you're
non-interest bearing.
Exactly. Yeah. But a liquid money market, you could put, if you think you need money in 6 months, put your money in a liquid money market, get your 4.5%, 5%, depending on where you're at, 5.5%, and you'll be able to pull that money out. There's no maturity around it like you would have with a CD or a treasury bill. So what kind of liquidity do you need? And that will drive the cash management strategy that you use.